Hey everybody, going to go over our Forex Trades for Friday, April 26th, last day of the week. Very similar to last Friday. Just had the one trade, was in the Australian dollar, US dollar, which you see that on the screen. Lost 13 pips. We'll show you what we did and what we were thinking. Everything else was, was based off the GDP number, which, as you know, we trade around. When the announcement came out that GDP missed economic estimates, everything just trended, went through the signal, and then just trended in that direction. And as it was, the Australian dollar, US dollar, we were in this trade for about 2 hours, maybe even a little over 2 hours. Just wasn't doing anything. We gave it quite a bit of wiggle room and got taken out. We'll show you what we were thinking. So you'll see here we were long at 1.02860. And we were just looking at these bottoms of the blue, the blue candles. From here, this blue, and even this red candle. And once it took it out, that's where our stop was. Our stop was actually 1.02729, and we got filled at 730, so saved a tenth of a pip, not that it's a big deal. But unfortunately, you can see there it maybe went down maybe another half a pip or so from where we sold out, and then it reversed and popped back up. I don't think even if we would have held it, I don't think we would have maybe pushed. Might have a chance to maybe make 1 or 2 pips, something like that. So it's not a big deal. But so we were stopped out, but that's the reason why you have stops, And like I said, everything else was just trending away. And the reason we trade around economic numbers is because those numbers can create such volatility that if you have your order out there from where a signal is saying to either go long or short prior to the economic number, it could rip through it. It could send the order. You could get filled, not at your price. You could get filled close to the end of that move, for example, and then it could reverse so quickly, before you know it, you could be losing 30, 40, 50 pips. Or it could go in your direction, which today and yesterday, none of the trades got triggered, but they all went in the direction. So in those situations, you could make money. The question becomes, wherever you get filled from when the order gets triggered to the fill, and then how much more does it have to move in that direction before you become profitable? And that's just a matter of the liquidity in the market and where the trade actually gets filled. And it's just like the equity markets. And you could have your order where you want to buy or sell, but if the news that creates the move is violent enough, if you're trying to buy something at, let's just say, $55 even, for example, unless you have a limit order and you're not going to pay more than $55, you might end up paying $55 and 20 or 30 cents. So it's the same principle. So I just wanted to clarify it for those that weren't quite sure why we do it. So we like to trade around the number, let the market digest. If it comes back and then we get filled, we get filled, so be it. If it doesn't and continues to trend, so be it. Just like a day like today. You'll get days like that, but then you're going to get days where it'll reverse and you get filled and it goes into your direction and you pull out a lot of pips. So, you take the no action days and you take the days where you lose a little bit like today. But again, that's why you have stops. Because this could have easily, if we didn't have a stop, what if this thing just continued to go down? Then where do you get out? So it's all about discipline. Anyway, so that's it for us. If you're still trading that algo, the link is still operational. Good luck. A few hours left in the trading week, and that'll be it. So we're done. Have a great weekend, and we'll be back Monday. We're going to reduce our size the last couple of days of the trading month. All right. Have a great weekend.